Hi, I'm Howard Mattson, President and founder of Plan One Financial Group, and welcome to Ask the Expert, where we bring you conversations with trusted professionals to help you make informed financial decisions. Today, I'm joined by Christopher Ricci, Chief Operating Officer and Partner at FHHP. With extensive experience advising closely held businesses and their owners, Chris specializes in tax planning and compliance, banking and refinancing, and a wide range of business consulting services. He works with clients across industries including manufacturing, construction, retail, professional services, and real estate. In today's episode, Chris will share practical insights into proactive tax planning and the financial decisions that can have a lasting impact on your future. From avoiding common tax mistakes to preparing for retirement, navigating major life events, and identifying opportunities to reduce taxes over time, this conversation will help you better understand how thoughtful planning today can lead to better financial outcomes tomorrow. So Chris, thanks for being here. To start, if you would, tell us a little bit about yourself, maybe about your role at the firm and what kind of clients you typically work with.
My name is Christopher Ricci. I'm a CPA licensed here in the state of New Jersey. I am a partner at Fabietti, Hale, Hammerstedt and Powers. I started working for them as a college intern actually in 2007, 2008, and I worked myself all the way up and I became a partner in 2018. I mainly handle a lot of the tax engagements, and the clients that we deal with range from a variety of high net worth individuals just with their individual tax preparation to closely held family businesses that range in variety of revenue anywhere from $1 million to $5 million to $500 million. And a lot of our clients have been long-term clients of our firm. Our firm's been around originally since 1959, and some of our clients have been with us for 40, 50 years plus.
Amazing. Well, Chris, sometimes people think about taxes as something you deal with, just once a year. From your perspective, what would you say the difference is between tax preparation and true tax planning?
With tax preparation, it's a lot of, here's our documents at the end of the year, come January, February, talk to you in 2 weeks when my tax return's done. You have maybe about a half-hour wrap-up call just to kind of finalize everything, hope everyone's doing well, anything big coming for next year, and that's kind of it. With tax planning, it's a more ongoing conversation that happens multiple times throughout the year. With our business clients, we try to do a lot of that work monthly or at least quarterly if we can, just so that we stay on top of it and we can make sure that we're adjusting any tax estimates throughout the year. For 1040 clients that don't have a business, for their tax planning, we kind of look at that more so as just an opportunity to keep that relationship going throughout the year and make sure it's an ongoing conversation. Even if there's no changes, we just like to touch base at least in the fall, if not summer, fall, and then tax planning. But the main thing is to keep in mind is that you want to make sure that it's something that's on your radar all year long and not just at the end of the year.
So it sounds like you guys try to be proactive in that outreach. Along with that, at what point should someone move from simply filing taxes to be more proactive about their tax plan?
So first off, anyone who's a business owner, I think they should be actively thinking about tax planning. If you're a W-2 earner or someone who's moved on to retirement stage in your life, any point in your life where there's a life event, whether it's you're having kids or you're thinking about your kids are now out of college and you're moving into the next phase of your life. Anytime there's a potential life event, starting to take Social Security, those are all good points to start thinking about tax planning. Even if there's nothing that might not necessarily need to be done, it's just a good dialogue to have so that you're prepared and would know what to expect.
Let's shift the conversation a little bit, Chris. What would you say are the most common tax mistakes that you see even successful families make? Even though they might be doing all the right things financially, what are they sometimes doing wrong?
The first thing is hopefully they're already taking advantage of retirement accounts and deferring whatever they can to a retirement account or taking advantage of Roth accounts if they're able to. The second thing is they might be doing well financially and they said, oh, we have a bucket of excess income we would like to invest. That's going to generate some passive income for them. While it's great to have that type of investment, they might not think about the long-term play on that. And that's where tax planning would come up. It might not be what that investment will generate for a liability this year. It might be down the road. So if you're going to be investing into an asset that might appreciate or a startup company or something like that, who should own that? Should that be moved into a trust? This way it's already out of your estate before that capital gain tax event comes 5-10 years down the road. So it's more so the dialogue of structure of how your assets should be owned, and it's a dialogue that they should have with an accountant and their attorney and their investment advisor to have everyone involved to make sure everyone agrees to that plan.
So are there tax planning opportunities that people miss because they're only thinking of the current year instead of long term?
Yes, we see it a lot with Roths and then with charitable contributions as well. So we have a lot of families that what we try to do is, while they're higher income earners now, maybe they invest a little bit into a DAF, or they plan to make sure that they are investing into the right structures or structured assets so that when they do withdraw income retirement, they're taxed at most favorable rates.
So for retirees or people nearing retirement, what tax decisions tend to have the biggest long-term impact?
The biggest thing is how they should structure their timing of their withdrawals versus capital gains. So depending upon what type of investment account they've had that they've put their retirement funds in, they want to make sure they're drawing from the right accounts appropriately. And also timing that with their actual needs. Because the other thing is, yes, you might have a certain amount that you think you live off of now while you're working, but once you retire, and now you have to not just take out $1,000 a month. To get you that $1,000 a month, it might cost you $1,500 or $1,200, whatever your individual situation may be. So it's thinking about the structure and actually thinking about what you actually really need to live off of, and making sure that you're accounting for those taxes in those withdrawals.
Gotcha. Yeah, we deal with that situation
Yes.
often, as you can imagine.
Yes.
We often hear people say, I don't want to create more taxes, right? So how should someone think about paying taxes strategically versus trying to avoid taxes altogether?
Yes. Yeah. No one likes paying taxes. But the best way to approach that is sometimes there might be a year where you may want to pay more tax. And an example of that could be, which we've seen with some of our business owners, with tax planning and a couple, different reasons why the business might have a loss that year. Maybe that with that business loss, it might be worth rolling over IRA funds into a Roth IRA. So you're using that loss to offset that taxable income. That'd be a reason where you might want to pay some tax to take advantage of that benefit versus, you're already retired and now trying to roll over your Roth and you're paying tax on it now when you've passed on that loss in prior years. That's a reason why. Another reason why, because if you're a business owner who's gearing up to sell your business, you don't want to pay tax, but you might realize if you don't show income to pay tax, when you go to sell your business, you're not going to maximize the value. So there's strategic reasons why. How we like to approach it is one, yes, you may have to pay some tax some years. We're going to try to do whatever we can to plan for it, mitigate it, and make sure we communicate it to you far in advance so that there's no surprises come April 15th.
Yeah, good point. This is a little bit off script, but I think it's valid for this part of the conversation. Had a client this morning who had $9,000 in total income and $23,000 in standard and senior deductions. So they actually had a negative income.
Yes.
Right. So the best thing we can do is try to fill that up.
Yes.
At least even to zero.
Yes.
Right. To give them, in essence,
Yes.
a free withdrawal, right, from their IRAs. So help us out. What life events tend to create major tax planning opportunities or maybe tax planning risks?
It's actually, I don't want to generalize, but kind of all of them at least warrant a conversation with a CPA. If you're going to move to retirement, if you're going to look to sell your business, if your spouse passed away, even if you have kids that's transitioned out of college and you're worrying about what should we do with the 529 plans. Now, an investment advisor can help coach you through that, but it's also important to see how will those distributions or rollovers affect taxes. So every event potentially has the ability to be a tax planning event or at least a tax planning conversation.
Sure.
So,
Okay.
yeah.
Good input. How important would you say it is for a CPA to understand someone's broader financial picture, not just their tax return?
Yeah, that has basically been a fundamental principle of our firm since it was founded in 1959. And that we don't just like to come in once a year, throw the numbers on the piece of paper and mail it back to you. We want to be involved and have a conversation, again, even if it's an email or something a couple times a year. And the main reason why is because without us knowing everything that's going on, or as much as we can know, it's hard, and sometimes one, you run the risk of missing something when the tax return's actually filed. Two, you plan poorly and you cost yourself dollars. the end of the day.
Now, how can a financial planning firm like ours help in that situation?
The biggest thing is, which we like and we appreciate, is anytime there's a capital gain transaction, 6-month mark, 9-month mark of the year, hey, this is where so-and-so's account stands year to date with earnings, making sure this lines up to where they were last year and their estimates are in play. Now, part of that is we like to proactively reach out to the client and ask, and they'll reach out for you for the information, but that dialogue is just what's more so important.
Okay, so what are some tax issues higher income families should be thinking about before they become urgent problems?
The biggest thing, again, I'll reference back the earlier point about properly structuring sometimes ownership of assets. Because what you might not think will be a tax issue down the road could always potentially be that way. So you want to make sure it's held properly either by you as an individual or in a trust or by a business. And then making sure that you just look at the structure and review it, makes sense as the different stages of your life still come into play. Another point is at the time of the sale of a business, something like that, you want to make sure that you review that with a CPA to make sure that the sale is structured properly, either as an asset sale or a stock sale, to make sure you're getting the most beneficial treatment.
So to that point, if somebody had a closely held business, could your CPA firm help them understand what the true value is of what they hold?
Yes, yeah. Besides myself, we have many licensed professionals on our staff, and everyone's willing to and does have that dialogue with their clients. And that, again, that's our firm approach, is being as proactive as possible and trying to get a general understanding of what your needs are now, what your goals are down the road, and how do we bridge that gap and make sure that everything from the tax planning point lines up with your other goals that you have in investing and estate planning.
So if someone could do one thing today to improve their long-term tax situation, what would you encourage them to start thinking about?
It might seem an easy answer, but I'm going to encourage them to talk to a CPA. And the reason why is because everyone's situation is very differently. And you want to find someone that you could trust and someone that you could really engage with and let them into your life and see some of the things that you want to have happen down the road or need to have happen now to make sure that you achieve your goals. And a licensed CPA is someone that definitely will be able to help walk through that. So I think that's number one for everyone else. The other thing is for any W-2 employees or even business owners, make sure you're taking advantage of all retirement plans. Make sure you're properly planning your gifting as well.
And sort of a follow-up question to that, what would someone look for if they were seeking out for a good, solid, trustworthy CPA firm?
The biggest thing is you want someone who has open communication, someone that's responsive and someone that's proactive. What we hear a lot is that, oh, I reached out to my CPA, they did my tax return, I had a follow-up question, I never heard from them again, I did my taxes next year, and the same issue occurred. Whether it's something as simple as making sure their withholdings are adjusted properly on their W-2 versus a larger issue of planning for capital gains. So the biggest thing is just making sure that it's someone that you feel is personable, you can connect with, and that is very open with communication.
Finally, Chris, if somebody was watching this interview and wanted some additional guidance, right, had some tax planning questions, what would be the best way for them to reach you?
The best way would just be call my office, Fabietti Hale, Hammerstead and Powers. And again, my name is Christopher Ricci, and that's the best way to give a call, and my team will reach out to you and we'll get to work.
Well, Chris, we appreciate you coming in. We've leveraged your firm for some of our clients and heard nothing but good things. So I appreciate you taking the time to let me interview you today, and I appreciate your expertise.
Thank you. I appreciate it.